The first of two budget forecasts that will help lawmakers make policy and funding decisions in the coming legislative session has been released and projects a surplus of $7.7 billion for the biennium that will end in the middle of 2023. Joining me to talk about the forecast is the Commissioner of Minnesota Management and Budget, Jim Schowalter. Thank you for being here.
Thank you for inviting me.
At the budget presentation, you said that the $7.7 billion projected surplus is, quote, out of the ordinary in these extraordinary times. What did you mean?
The number surprised all of us. And, you know, we've been going through highs and lows over the last couple of years. We've been dealing with COVID, social strife, questions coming all the time. And all of a sudden, here is literally the largest surplus we've ever seen. I've been in state service for more than 20 years, off and on, but overall, I've done a lot of forecasts, been around and contributed to many of them. Never has everything kind of gone the same direction like this forecast did and lead to such a unambiguous conclusion of resetting the budget and taking us to a different place.
Now you're talking about resetting. The surplus is due to higher than expected tax receipts in Minnesotans' income, in consumer spending, and in corporate profits. So, correct me if I'm wrong, but no federal recovery money or aid is part of this. All of this $7.7 billion is the collection of tax receipts that are projected to the end of the biennium. So it begs the question, are Minnesotans being overly taxed, or are we just, as you kind of said, resetting? Now we need to get the lay of the land again?
Yeah, I think that last point is the key. We got to reorient ourselves, reassess where we're at and where we go from here. Because, you know, overtaxed, undertaxed, that's always a kind of a point in time assessment, seeing how the economy is performing, seeing how our businesses and our individuals are making it. But right now, you know, it looks a lot different than it did a year ago, when we expected literally to not be able to, we weren't sure if we could pay the bills by the end of the fiscal year. Instead, we're at a place where our revenues are much stronger than we expected, and that, frankly, federal policy has done exactly what it should do. It gave people confidence, it gave the states the ability to respond to COVID challenges, and that lift is something we get to figure out what to do with now.
More than once in the report, the word coexisting occurs with regard to COVID-19, because, you know, the shape of the pandemic is still one of the unknown factors that puts risk in this forecast. What have we learned as a state about living with COVID, about the tools to help manage the economy through a pandemic, and about understanding how to deal with this risk going forward?
We've learned a lot, and I think everyone who's watching that, whether they realize it or not, has learned things, and we're just seeing how we do things differently. Even sitting here with you today, you know, it was a conversation of whether we're going to do it through Zoom or be here in person. You know, I do meetings all the time, back to back to back, through Teams, Microsoft Teams. The bottom line is we're finding different ways to get our business done. And much of the economy has adjusted and continues on forward. And that's the reason why our tax revenues look the way they do. That our corporate profits have been strong. That incomes for a lot of individuals in Minnesota has continued to be strong, and it wasn't impacted by COVID. The challenge is to address the parts of the economy and the parts of our population that were impacted, that are frontline workers, that are people who've lost their jobs because the restaurant closed or some other activity really doesn't work or hasn't adjusted yet.
And so that actually leads perfectly into my next question. The U.S. Bureau of Labor Statistics wrote about the K-shaped recovery in a working paper that was issued in July. The K refers to the divergence between those who are doing well and so are ascending in that part of the K, or those people in the economy who are not doing as well, and that's the descending part of the K. Is Minnesota experiencing a K-shaped recovery?
I think it's unambiguously the case, where some people are doing great and some people aren't. And, you know, you watch the forecast release yesterday, I'll say for myself, but I think almost everyone who was at the podium had sort of an ambivalence, because to say that we have a $7.7 billion state surplus suggests everything's good. And we just know it's not. We know that there's communities that are hurting, that there's businesses that are hurting, that there are families who are struggling to figure out how to keep their kids' attention while they're figuring out childcare that isn't available right now. So the bottom line is yes, at the street level, absolutely, it's a divergence of outcomes. And that's part of the challenge of going forward. How do we deal with that? What are the supports? What are the adjustments and tactics that we need to take so that people can stay healthy, get the services they need, and live their lives?
And do you feel like the businesses are doing a decent job of figuring out how to move forward and still be profitable? Like all sectors, or there's some sectors doing better than others, do you think?
Oh, certainly some sectors are doing better than others. And certainly larger corporations are doing better than smaller ones. Service sectors are doing worse than ones that you can sort of do at your computer terminal. Look at child care providers right now. They're struggling to get by. Check out the long-term care industry and nursing facilities or assisted living facilities. They're trying to keep staffed up so that your parents or your grandparents still get services. Hospitals, across the board, there are a lot of industries right now that are under stress because, in part, there is low-wage jobs that aren't as attractive as they were before, or because there's health risks. And so those are the things that you can see on a daily basis that we're trying to respond to as a state government. And I think as policymakers, everyone's going to be looking at those same challenges.
Some of the surplus by law is going to be diverted to refill the state's budget reserve. So $870 million of the surplus will go in to fill up Minnesota's rainy day fund to its statutory maximum of $2.6 billion. Why is it so important that Minnesota keep this reserve as full as possible?
I think the best example is just what we lived through. When I came on as commissioner of MMB a year and a couple months ago, some of the first voices that I heard from the legislature was, start cutting because we aren't going to have enough money to pay the bills by the end of June. We're going to need every dollar in that budget reserve in order to just get out of the year. And if we didn't have a budget reserve, we'd have made a lot of changes really quickly in order to just sort of keep going. And those cuts, those changes, those taxes, those staff cuts would have compounded the problem that the economy and the state's budget would have had right now. Being able to assess the information, get a clear view of where you're going is invaluable when you're going through fog. And that's what we've been doing. We've been going through fog. The reserve is our light. It helps us sort of assess where we're at and gives us time to make good decisions.
Final question. How does or will inflation impact the forecast and the economy? This forecast assumes that inflation will return to, quote, normal in 2023. But what if it doesn't?
If it doesn't, it takes a bite out of everything we're expecting. Current services is the appropriation level that we've put into place. You expect certain levels of activity, certain services. If inflation remains high, the services that we get this biennium for those dollars are going to be less. If inflation persists into the future years, our numbers aren't going to be apples to apples. They're going to be apples to some smaller apples or crab apples because the services will cost more and we're going to be allocating the same level of dollars. So that is always a problem and a worry for somebody in my position because we want to make things as simple as possible, and inflation really makes it hard.
Commissioner Jim Schowalter, so nice to see you in person. Thank you for coming.
Thank you.